Finance Minister at the federal level, Chrystia Freeland, has presented her controversial capital gains proposal to Parliament, setting the stage now for a key vote.
Taxing capital gains is not an inherently partisan idea. It's an idea that everyone who cares about fairness should support.
The Liberals want to hike the inclusion rate on capital gains from 50% to 67% for people who make more than $250,000 in profits in a single year from capital income, like the sale of a secondary property, like a cottage, for example, or stock options.
So to talk more about this morning, Ian Lee, professor of the Sprott School of Management at Carleton University, joins us again to get some thoughts on this. So, Professor, what's your initial take on this? The fact that the Liberals have actually carved this out of the actual overall budget vote and just put this into a separate situation, what do you think this says about either A, the importance of it, or B, perhaps the political implications of this move?
Well, thank you, Nick. Quite bluntly, I think it's being driven by political considerations. I've looked at some really distinguished analysts. I'm talking Professor Jack Mintz from the University of Calgary, Professor Kevin Milligan, and the impact of the capital gains tax. Full disclosure, I do not have any capital property that would ever be subject to a capital gains tax. All I own is my own house and a 14-year-old car. So I'm not saying this because I'm gored by this tax. I'm not. But I think it's very bad for Canada because I want to get this out right away very importantly. What we've done in Canada, what we're going to do is create a gap between our country on the capital gains tax higher than next door. That's the largest economy in the world. And we are already losing people emigrating to the States. We already have capital flight going to the United States. And this is simply going to incentivize some investors, not all, but some investors, when they're facing a choice, should I invest here or should I invest in the States? Well, maybe I'll go to the States because I'm not going to be paying the same high level of capital gains tax as in Canada. So, I mean, that's the first and foremost, the most, I think, most important criticism of this tax.
Yeah, that it's going to hurt us on a national level for businesses. But Professor Lee, you know, Chrystia Freeland says that this is a quote unquote fair tax, that it's just making the wealthiest pay their fair share. However, there's been some feedback and criticism saying that this is actually going to hurt the middle class, those modest income earners and people who do have properties and entrepreneurs. So what's your take on that?
I believe that's the case. There have been a significant number of op-eds in the Globe and Mail and elsewhere in the last several weeks, written mostly by chartered accountants who are experts in the tax system. And they point out that anybody who owns a second property, a cottage, and there are millions of Canadians, because the grandparents bought the cottage, you know, 50 or 70 or 80 years ago, passed it down to the children, and then they pass it down to the grandchildren. They are going to be affected. There is no question. That number is, I'll be very blunt. I'm sorry for being so blunt, but that number put up by Finance and Ms. Freeland of 0.13 is a bogus number. Professor Jack Mintz estimates it's well over 1 million, and that's not including the number who will be affected by pension plans. Back to the cottage. It's not just cottages. There are people, I've read stories of people who have bought small little walk-ups in Toronto or elsewhere, you know, a fourplex to supplement their income in retirement. They're going to get hit if it's a secondary property in addition to their house. And the tax, let's remember this. This is really important. It hasn't been said yet, Jen. The tax, they say, well, it falls on the wealthy, you know, when they sell their house. Well, Ms. Freeland isn't quite leveling with us. Because all those kids out there who are going to inherit that cottage, it doesn't fall on the parents. Let me be really blunt. When I die, I will not pay the tax. Dead people don't pay taxes. It falls on the estate, which means the children. They will pay the inheritance tax, the capital gains tax, I should say. And so we're playing words here with language. They're saying, well, you know, the rich person will pay it when they pass. You don't pay taxes once you die. You are not here. You ceased to be. You don't exist. It falls on the children. And there's this huge intergenerational wealth transfer that's going to take place in the next 5, 10, 15 years. StatsCan has written about this. BMO Pension has written on this. And some of that wealth transfer going to the children and the grandchildren are going to be hit with these increased capital gains tax. So it's going to fall on young people and on the middle class.
Yeah, and in fact, that's our solicit today, is to our viewers, are you willing to sacrifice your entire retirement to help your kids, you know, move into their home and live in this time of increasing costs? All right, Carleton business professor Ian Lee, thanks so much for your time. Appreciate your honesty as always.
Thanks, Professor.